Started. Okay. Now, coming back to the question, as I was saying, for 15,000, at 16%, that's 10,185. For 15,500, 17%, that's 9,960.5. Now, if I write that in the form of AOB, like Sel was mentioning, or in this form that we had written, in 16%, the present value is 10,185. For 17%, the present value is 9960. We are trying to find out 10,000. That should be the question mark. What is the rate in order to get the present value of 10,000? Now, in the same logic, when you calculate the difference, so I say for rate difference of 1%, that is 17% minus 16%, what is the difference? It is 10,185 minus 9960 equals 225. Can somebody repeat these three sentences with these numbers? Just in that logic, you tell from your side. Can somebody tell?
We will have to say that for 1% increase in interest rate, the
Other way
difference
around.
is 2.
Other way around. Other way
Oh,
around. The difference for the decrease of
for decrease of
225.
225,
Yeah.
the difference in interest rate is 1%.
Perfect. For decrease.
So for a difference of 10,185 minus 10,000, what
Yes.
will be the
Perfect.
interest?
That is absolutely perfect. What should be the calculation?
So it should be first we have to find out 10, 1, so that is A, 10,185.5
Yeah.
minus.
So for decrease of 225, our increase is 10%. For 1,
1%.
that is 2 divided by 225.
Yeah,
For
25.
decrease of 185.5.
85.5. Yeah.
Can somebody tell how did I reach to 185.5?
So 16% present value minus original investment.
Minus original initial investment, that is 10,000. So 10,185.5 minus 10,000, that is 185.5. So that should be 1 divided by 225 divided 225 multiplied by 185.5. Now that comes to 0.82. Now what is our IRR? Can somebody tell?
16.82.
16.82. Never forget that. Once we are done with our interpolation, we'll have to add that resultant with our initial or the smaller percentage. 16 plus 0.82, that comes to 16.82 percentage. Any doubts, guys, in this?
So I think this the way we get confused is I've been trying for is that many times we take like A, B and OB. So that's where you get confused. So my earlier answer, what I told 0.17
was based on 10,000 minus 9,960.
9960.
Okay.
Yeah, that's I think where we make mistake.
Got it.
So it is actually AB and AO, if you remember, I think that will be easier for us.
Absolutely correct. Now that you have practiced, you know exactly where you are getting stuck. That's absolutely good. For others, it might be some other point, but they have to practice. Without practicing.
Can you repeat the interpretation, Dheeraj?
Yeah. So this part, you mean? Or the AO part you are talking about?
I just said you were.
I could not hear. Sorry.
This part I understood. Your calculation I understood.
Okay.
This is the same thing we did for project P, right?
Yes.
But you said some interpretation we need to write that I missed.
Oh, no, I have not told yet. I'll come to that. So interpretation we are not done yet.
Okay.
Yeah.
Sorry, Dheeraj, I have one question.
Please.
For project P, I'm just going back to the initial thing. For project P, we have found out PV because the the amount was same. like 3,000. So we did the PVIFA and then we found out the amount. But for the next one, project Q, we have to find year wise and then add up for 16%, 17% like that.
Absolutely correct. For every rate, you have to go by year. You are absolutely right.
Okay, so we don't have the easy
Shortcut.
method like.
No, we don't have the shortcut. No.
Okay, fine.
Yeah.
And also, Neeraj, we have to always follow the sequence, right? First, we need to calculate before IR, like what is it terminology?
Payback period you're talking about?
Yeah. We need to follow that sequence, right? We can't just skip payback period and then try to calculate IR and then come back to payback. It's not that.
No, there is no link between those two different methods. If the question is asking in that sequence, you can calculate in that sequence. Question can also ask first IRR and then payback period. That is also fine. Anything that question.
So no interdependent.
No, they're not interdependent. No, they're not dependent on each other. Okay. Anvisa, any other question? Is that what it is? Are you able to calculate the present?
Ashwati, I think.
Oh, sorry.
Yeah.
Okay, I'm sorry. So that's clear?
Yes, Dheeraj, it's clear. Thank you.
Cool. Any other doubts, guys? Okay. Now that we have reached here, let's decide. Should the higher one be better, or the lower one should be better? Give me some guesses. What should be better? So in one project here only we have in one project how much 15.25. In another we have 16.82. Which one is better?
Rate of return should always be higher, whether it is IIR or whatever it is, right?
Absolutely.
When it is rate of return, getting something back, I think that is how we should look at.
Yes. Absolutely correct. Others, are you able to connect? If you think about it from present value perspective, no. If somebody tells you that my project will give you such returns that you have to increase your rate of return to equate it with your initial investment. Increase by how much? You have to increase to 15%. So he says, my returns are so high, my returns from my project is so high, you have to increase your rate of return to 15% in order to equate with your initial investment. Other person comes and says, you have to increase your rate of return to 16%. I give such returns that you have to increase your rate of return to 16% to equate with your initial investment. Which one is better? 16% only, right? So it's all about that logic of thinking. What we are calculating, how do we compare two things? But easier method is what Sel shared. Absolutely, rate of return always go for higher one. And but when you think about it from IRR perspective, what exactly we are calculating in IRR is the present value. When you go by that logic, it's complicated, but it gives you a clearer picture for the IRR. What IRR? How do we use that? In IRR, we simply calculate the present value of few values and we equate that. We find out that rate which equals the cash outflow with the initial investment. When we have two different rates, how do we compare? We think about it from this perspective, saying, what is that rate of return? How high my rate of return has to be so that my inflows will be equal to my initial investment. If more inflow is there, then more rate of return is required. If more inflow is there, then more rate of return is required in order to equal it with the initial investment. So higher the rate, the better. So if you have the higher rate, then you go for that project. Is it clear, everybody? Anybody wants to repeat that analogy?
No, it's clear. So it's something like if a company wants to invest something, first it has to be make sure like whether we have to go for investment or not based on the percentage what we are calculating.
Yes, absolutely correct. All of this
If
is
it is,
for capital budgeting. Capital budgeting name itself deals with should you accept this project, should you not. This really helps in terms of from financial perspective at least, whether the project is viable for a particular company, for us as individuals, or whatever reason. Yeah.
right.
In fact, you can use this logic, this capital budgeting logic, when you are purchasing some high end assets. Suppose you're buying a car, or you're buying a land. You can actually use this logic, considering 2-3 options. You can either have the money with the bank, you can have the money invested in the FD, you can have the money invested in some stock market, and you can invest in the suppose vehicle, suppose some car. You can compare these different ideas using the capital budgeting. In personal decisions also you can use it. We can go in deep if you want, maybe separately, not with others. But yeah, this is pretty very much interesting when you link it with practical stuff with your life. Any doubts? Any doubts, guys?
And this is one, and this is only for one specific year, right? So whatever we are calculating, okay, for this particular year, only for 1 year, not for a particular year, just for 1 year we are calculating this percentage. Is it like for future 5 years, or is just for 1 year this higher percentage we are calculating?
So no, this is not for 1 year, I would say. I think I should ask that to you guys as we are done with the whole concept only. When you look at um, rates, specifically rates, and suppose we start with the IRR only, this rate that we calculated 15.25%, this 15.25% is applied in the first year, second year, third year, fourth year, and fifth year cash flows, right? That's when you are getting the present value of 10,000. So this rate is not just for 1 year. This is for the overall whole project only, all 5 years, for every year
Okay.
that you are applying that to.
And there are chances also, for example, let's assume like for first 2 years I had continued. This is something like future also we are calculating,
Yeah.
including starting from first year to fifth year.
Yeah.
Suppose if management wants to change the rate, so they can interpret and they
Absolutely.
can.
No, absolutely. So again, think about it from the perspective of a decision maker. You cannot change the rate, to be very honest. But I understand your logic. If you after 2 years, if you think that here when we're standing we were thinking 3,000 cash flow we'll be getting, but after 2 years we saw that the project is not working properly, so that cash
Correct.
flow is 2,500, or some other factor of consideration is changing. So yes, that brings us to advanced level of problems in capital budgeting. So that is not there for us. Sir has not done anything of that
No,
sort,
no.
but definitely that's possible, and that happens in the market. And there are actually questions involving that only, which are considered a little more advanced.
Got
Yeah. Okay. Now, all right. Any more doubts, guys?
No, Dheeraj, I understood, but actually I missed your interpretation part.
Oh, okay.
Can you repeat that again?
Sure. So in the interpretation, what we were deciding was which one is better, the higher the better, or lower the better. You guess, no, in IRR, in one project we got 15.25%, in another we got 16.82%. Which one is better, you think?
16.82.
Why? Anything that comes to your mind?
ROA will be more with a more percentage, higher percentage.
No, we will get the returns earlier, right? Because the rate is high.
Yes, yeah, absolutely. That logic is absolutely correct. And Sami was saying ROA would be higher. ROA logic will not work because this rate is not really giving us ROA. We are rather coming back from inflows to initial investment. So just simply think about it like rate of return. Rate of return higher, that means that's better, right? So 16.82 is better, more than 15.25. That means 16.82 is better. The other way around, the interpretation is when you think about it from IRR perspective. Um, so if somebody tells you, my project is so successful that you have to increase your rate to 15.25% in order to equate that with your initial investment. Somebody else comes and tells, my project is so successful that you have to increase your rate to 16.82% in order to equate that with your initial investment. So that's the IRR perspective. You can also think from that perspective. You can also go for the first one, whichever is easy for you, you go for it, no problem, both are fine. So in the second one also, you are able to connect that 16.82 is better, right? Yeah. So 16.82 is better.
Dheeraj,
Please.
Dheeraj, this is how I think I personally remember
Yeah.
this thing. When it comes to rate of return,
Mhm.
it should be high. When it comes to period of return,
Yeah.
it should be low. So the first payback period part,
Yeah.
it should be as low as possible.
Yes.
And when it comes to the rate of return,
Yeah.
it should be higher. I think this, if you keep it in mind, I think it becomes easy for us.
Absolutely correct. You connected both the things, so that way you will actually remember. That's a very nice way. Everybody, you can also you can follow this method as we have discussed. But at least one thing you have to acknowledge, that this interpretation part is important. This will carry some 2-3 marks. After calculating all the numbers, we have to take a call, which one is better, which one is not better. And in order to do that, we have to know which one is which. So here is a synopsis for all of that.
Okay.
For payback period, it was lesser the better. For everything else, higher the better. Whether it's ARR,
ROI
whether,
is different, right? ROI is different, IRR are different, right? Both are
yes,
not
yes.
same.
ROI is totally different. ROI is something we learned in ratio analysis. So that is return on investment. So that is calculated by dividing the net profit by the total investment that you are making in a project. And somewhat similar to ARR, but in ARR we are taking average. There you take the whole investment only. So we are not calculating ROI anywhere in the capital budgeting chapter.
Hmm.
Yeah. And there is actually more detail to it into ROI, to the numerator and denominator. No, there is more detail to it. So the numerator, as I said, is net income. Denominator, I said, the total investment. In the total investment, there are more complications to it. What should you add? Rather, what should you deduct? Should you deduct the outside liabilities? So it's totally different calculation, and for a different purpose altogether. ROI is calculated only to judge a particular financial statement or a company's financial position, not to decide between capital projects. So yeah, it is totally different. You are right.
So Dheeraj, for this question, actual answer is from this interpretation and the ranking which we show based on the question, and other all are working to arrive this, right? This is
Yes.
the actual ask.
Yes. So actually, your interpretation, your final answer will be based on these numbers. So here is a synopsis of the numbers. As I said, um, sure, Shal, no problem. Um, uh, as I said, payback period lower the better, and for everything else, higher the better. And here, if you look at it, Project Q is better almost in 4 out of 5 indicators, right? So you are definitely going for Project Q only. However, this is a kind of managerial decision. One manager may come and say that, what, for me the payback period is the most important, because cash flow is very vital for me. In coming years, I'll be needing the cash flow, so I'll go for payback period, even if the Project Q is the other indicators are saying something else altogether. I'll go for Project P. So it's purely managerial decision. So that also can be done. But while answering, you go for the highest one, whichever is having the highest number. No, yeah.
Yeah.
And if you'll ask me which one is the most valuable one, out of these five, payback period, ARR, NPV, PI, and IRR, which one has the more value to it? I would answer NPV. NPV is the most famous one, and that is used more often than others. And if you want to go for only one
Net
indicator,
present value, right?
net present
Net
value.
present value.
Yes. That is the most valuable one among all these five. So that's what your interpretation should be revolving around, these understandings only. In any doubts, guys?
No, thanks, Dheeraj. Understood. If you don't mind, can you just more explain ARR and IRR? What's the difference between these two?
Okay, sure. ARR is when, if I tell you you invest 12,000 today, I'll give you a return of 1,200 at the end of the year. That means your rate of return is 12%, 10%, right? So that is ARR, simple, average rate of return. So, but there are some differences. I just give a simple example, but IRR is what? IRR is when you are finding out the rate, the exact rate in which your outflow equals inflow, the rate at which your outflow equals inflow. So in ARR, it's a simple calculation of return uh, by just looking at how much you are getting and how much you invested, basically. But
So it's something like on fly we can do ARR, but it's not the case with IRR. On fly we can't do it. We have to do some interpretations and do some analysis.
Yes. With IRR, however, it's slightly more complicated than ARR. And in IRR, the whole logic has to do with your inflow should be equal with your outflow in that particular rate of interest. Is that okay?
Yeah, Dheeraj.
Yeah, cool.
In Saurav, in simple case, like as Dheeraj already mentioned, IRR is something it's going to give you the exact percentage in decimals. See, in ARR, it's like a whole number. It's always like 10%, 12%, 11%. It is not in decimals. If you see in IRR case, it will be always in decimal percentage. It will be never be in whole number. It will give you the exact percentage what it is going to like give you a profit for you. Like whether it's project P or project Q. Is it correct, Dheeraj, what I said?
No, ARR can be decimals. ARR can be decimals. That's not a problem.
Okay.
Yeah. Error can be
Actually,
dismissed.
what I was trying to understand is the application. So basically, if I need to know uh, that initial investment in 5 years, what will be the rate to achieve that 10,000 in next 5 years? So that I will get to know from IIR, right? I have to that to from the rate of 15.25% for project P. I'll achieve 5 years the initial investment, correct?
Can you repeat that analogy that you said? I want to listen to it
I'm
once more.
So what I'm was trying to understand is for project P,
Mm-hmm.
in 5 years,
Mm-hmm.
I have to achieve my initial investment, which is 10,000 rupees. So
Correct.
I need the 15.25% interest, rate, to achieve my initial investment after 5 years. So that is IRR, correct?
That is a good way of linking it. Yes, I think that's correct. Yeah, absolutely. If you just turn two things, you said in order to uh, reach to my uh, reach to my initial investment, I need return of 15.25. Instead, if you say the other way around, uh, uh, so in order to reach to our initial investment of 10,000, I need to discount my returns by 15.25%. So why I'm saying that is because discounting and rate of return are two different things, and here we are discounting it. We are finding the present value of the gas inflows.
Okay.
So when I say 10,000 and the rate of return is 10%, that gives me total return of 1,10,000, right?
Yeah.
10,000, 10% and 1,10,000. However, if you think about it, how much of discount I should do to 1,10,000 to reach to 1 lakh, sorry, 10,000, that would be something else only, right?
Correct.
So
Correct.
that's what is the difference between these two. The return is something going from 10,000 to 11,000. 10,000 to 11,000 by at the rate of 10%. So the rate of return is 10%. When you coming back from 11,000 to 10,000,
10,000.
by how much should you discount? That should be your IRR.
Correct. Because we are talking about the future value here.
Yes.
From future value to
present
we are
value.
coming from future value to present value. It will be discounted.
Yes, that is correct.
And ARR is completely different. That works on profit after tax, not on cash flow.
Yes, that is correct.
Okay, that's a simple one. Profit after tax divided by average.
In case in some question, profit after tax is not given at all, you go for cash flow. That is fine.
Oh, that is also.
Yeah. If the information is not there only, then we can go for cash flow only. Cash flow is fine.
Okay. We don't need to look how to get this PAT.
Yes, no, you don't have to. Okay. Any other doubts, guys?
Okay. No, thanks, Kirtan.
Yeah. So let's. It's already 11:09, so we'll wind up. But that question that I had said yesterday, calculate all of these 5 for those 2 projects. So project A and project B. Answer is there with you already with that in that Excel file that I have said. But please do practice on your hand. That's when you get more familiar with it. You can come up with your logic of remembering stuff, or you can tell me where else are you getting stuck. We can discuss on that also. You have to I think we had already covered payback period, NPV, and ARR yesterday. So today we only did IRR. You can practice the IRR on this question and just equate your answer with the answer that is there in this file. If you are having any doubts, you can call me up, we can discuss. Otherwise, we'll be meeting today evening again to discuss further on this, or moving on to the next topic, that is capital rationing.
Sure. Also, like the notes are with you only, right? All class notes.
So I have posted the class notes in the Google Classroom only. All of them are there.
Oh, okay.
Yeah.
Okay, got it. Thanks.
So since a long time I'm not sending the mail, I'm posting them in the Google
Classroom
only. Yeah.
Thanks, God. Thank you, Ganesh.
Yeah. Any doubts, guys, before we wind up?
We'll practice.
Actually, overall concept looks easy only. What I'm thinking that majorly we are making the mistake in calculation.
Yeah.
And
I'll tell you
the question
one
are
more
lengthy
challenge.
one, but these are the concepts are easy only.
I'll tell you one more challenge. Okay. Now look at. Give me 1 second. I'll just share that portion with you, which has said are important for our exams. Okay. Give me 1 second. Yeah. Can you see this? So these are the portions. Those are important for our exam. These are the practical ones. These are the theory ones. So we are just in capital budgeting as of now. And then we are going to capital rationing. In that also, this kind of calculations, separate calculations, the capital structure, there'll be different calculation, EBIT, EPS, separate calculations, WACC, separate calculations, so on and so forth. One other challenge is we have covered all of it to remember which one is which, or even just to remember what we should do. That would be a challenge if you don't practice. So individually, if you look at these numbers, these calculations, these are not really complicated. This is not some, rocket science. It's very simple mathematics. If you understand the logic, you'll be able to calculate. It's just that so much is there for us to remember all of them together. will be the challenge. That's what I'm saying. The solution is just to practice. At least 2-3 questions if you practice, no, day before exam, or at least within a week difference from the exam, that should be fine. That should be fine. But do practice.
Dheeraj, one quick question.
Please.
Not a question, a doubt. So all these methods, like whatever we are able to see, the capital budgeting, ratio structure.
Yeah.
So is it something like what is the objective behind? Like, is it something to calculate the profit, and which is the best method to go with the budget A or budget B, which is we are going to do in capital budgeting? Is the same concept applies in all these other topics like rationing, structure,
No.
EBIT, anymore? It's income before earning before income tax. Then WCC, or
No.
is something totally different concept?
Decision making, as I said, the capital budgeting is, like I said, all of that. We are deciding among projects, we are deciding whether we should invest in something, and so on and so forth. But the logic is different for the other chapters. So when you talk about EBIT, EPS analysis, which you were mentioning, that's when you are deciding how much should I keep the fixed cost, how much should I borrow from a bank. Often with entrepreneurs, when they start a business, they have this question of how much should we invest from our own hand, how much should we take as a loan from the bank. How should you decide that? That's where EBIT, EPS analysis comes in, and it helps you, gives you perspective from financial point of view, not from others. Other factors are also there, but at least from financial perspective, it tells you, with this much of project in hand, this is what is the percentage should be. Don't go beyond this much of percentage of debt. So every chapter has a different objective altogether. So WACC helps the investor. WACC helps the investor in order to compare two different companies. So WACC is nothing but your expectation of an investor. How much of return are they expecting, and that determines the effect on the stock value also. So that is a whole different analysis. So not in any way similar with capital budgeting or EBIT, EPS analysis. So similarly, other chapters has their own relevance only. Yeah.
No, why I got this question is, if there is one problem, if any of this method can be used, means any of this method can be applicable to solve that problem in that particular area. For example, like let's say there is a problem, so it can be like fall under capital budgeting, rationing, structure, EBIT. Same problem can be manipulated and use it under all these 4 or 5 topics. No, right? It's not possible.
No, it's not possible. One, if you want, if a teacher wants, he can. He can club all the data together in one question, they can. But similar data, if it's given, like we have seen in these questions that we just solved, that for that question, you cannot calculate EBIT, EPS, because sufficient information is not there. Yeah, as you said, no, it cannot be done like that.
If that is not the case, then like one kind of confusion is gone. Otherwise, we'll be thinking like if the same problem can be solved with any of these methods, then it will be a problem which method we have to use.
True. No, I agree. But what happens is the challenge is, what? In order to remember which structure of question is what is also a challenge. When you look at it individually, because when you are practicing it, it seems very easy. But when you have completed 5 chapters, then suddenly one question is given to you. Even if the structure is, for that particular chapter, you have to remember that I have to calculate that way. Are you getting my point? So that happens with me a lot. So often in exams, what happens is I'll be looking at the question. I'll be very familiar with the question. I know this question. I have read this question. I cannot remember. Should I calculate? Should I start building a table? Should I start calculating a ratio? Should I start with this, or should I start with that? So that's because of lack of practice. The more you practice, you get more familiar with the structure of the question. The moment when you have practiced enough, you look at the question, you will remember the answer. Just by looking at the question, you will be able to remember what should I start, where should I end. So that's where we should be. We should practice few questions so that we get familiar with the type of questions.
Got it. Got it.
Dheeraj, when will you be planning next session?
Today evening, maybe. I've not decided the time. You guys suggest, no? What time should be okay with you?
Early is
I'm
the
okay
best.
anytime because lockdown is there in my place. So
Okay.
I can't go out.
Somebody mentioned the variable factor of IPL. IPL is there today.
No, it's okay. I'm not watching. Dheeraj. And whoever is watching IPL, they can see the recording. Sorry for that.
That's all right. I mean, I'm okay with any time. So if the same timing we do 6 to 7 is also fine. But I think IPL also happens at 3:30 some days, right? So if that's the case, there is no other option only. All right, we'll decide the time in some time, and I'll share the invite. We'll go from there.
Sure.
Sure, no problem. You can go for early also if you want.
Okay.
Not a problem.
Sure. Fine then. We'll wind up.
Yeah. Thank you.
Yeah.
Dheeraj.
Thank
Thank
you.
you. Thank you, Dheeraj.
Thank you, Dheeraj.
Thank
Thanks,
you.
everyone.
Thank you.